Prop firm trading is honestly one of the best ways to scale your income if you are a profitable trader, but that's the key word, right? Profitable traders. So in this video, I'm going to show you guys seriously one of the most simple strategies. Like it's seriously so simple. The hardest part is honestly just mastering your mind, your discipline, your patience, and waiting for the setups to happen. But if you can master that, I mean, this is, guys, seriously, it's literally the most simple strategy ever. So without further ado, let's get into the video. I'm going to show you exactly what this strategy is, the breakdown, how to set up your charts so that way you can find the setups, and exactly what you need to do to take them. And I'm going to show you some actual live results of live trades that I took, not cherry picked, back tested, things that I just found on the charts, like actual trades I took live with you all as I was streaming every Monday, 9:15 a.m. Eastern Standard Time. Okay guys, so we are here on the chart and we're going to build our indicators out that we need. It's literally just 4 of them and exactly what we need to do. So step number 1 is we need to add these to our chart. And again, I can't emphasize this enough. You are not trading off any blind indicator. You're not just seeing a green arrow or seeing something red or green and then going long or short. You're not doing that. We're using price action, we're using support and demand zones, and we're making sure we get into solid entries with the trend. That is literally as simple as this strategy is. So the first indicator you're going to add to your chart is the whole moving average. Okay, it is a very smooth moving average that has like very little lag. It does not lag like normal moving averages, exponential moving averages, all those other ones. The whole moving average is an amazing tool to show you where the trend is and where it's most likely going to go whenever you're scalping or even, just swing trading. It's a really great tool to have. Now my settings is when you add this, when you search HMA, it's no fancy indicator. It's just one that TradingView has. I set the length to 55 and then I like to make it yellow with a little bit of more thickness so I can see it on the chart. Next one is the no nonsense FX. I just use the McGinley setting here with the moving average type. So if you just search NNFX on indicators, you'll find that there. Make sure you click the McGinley setting. This will be default, and then 56 should be default as well. You don't have to mess with any of these settings. This will be what it looks like when you add it to your chart, all this mess. I just turn all that stuff off because I don't use it. And like I said, we're not blindly trading off arrows or anything, but if you want to, you can keep them on there and whatever, but I don't blindly use them. I just like it to have them on there because it shows the emphasis so I can actually see it. But it's totally personal preference. It does not matter with the strategy. Sessions. So if you just type in sessions on chart here on the indicators, that's this one right here. This just shows me the time zones that I am trading in. Again, I'm looking at the London session and New York session. I don't care about Tokyo and Sydney because I don't trade it. And then the last one, to trail our stop losses to make sure we squeeze as much profit as possible. I like to use the SAR. So again, if you just type in SAR, it's the parabolic SAR. It's this one right here. It's just a normal TradingView indicator. I don't mess with any of the settings. I just like to turn it to yellow, and then it'll come default to these little crosses. I'll just make them circles. It just looks better to me. Doesn't really matter. You may make an extra 1% a day when they're circles, but who knows? I don't have any statistics to back that up. Okay, so after you got your chart, this is what your chart should look like minus all these little lines here. We're going to go over what these lines are right now. So once you have your chart set up, like I said, we are not blindly trading off any singular indicator. The first thing you're going to do before your trading day, and this is why I said at the beginning of this, you need to practice patience. Okay, you need to practice patience in any trading strategy that you're doing, but this one most definitely. You have to wait until market open. Okay, so if we draw a line here at 9:30 a.m. Eastern Standard Time, convert that to whatever your time zone is, whoever's watching. This line right here, we're not taking any trades right here. What we're doing is we're getting the lay of the land and the context of the price to then trade at market open. We're not sitting here trading this nonsense. We're not trading this. We're not doing none of this. We're literally using this to build context, to build our plan, because you don't go into a battle, you don't go into, a test without studying, you don't go into a car without making sure you have gas in it, right? You have to have a plan before you do something. A lot of people, they'll immediately open up the chart and start going crazy trading without any context of the price, without any reasonable understanding of why price is doing what it's doing. You need to have that. So we're going to go to a higher time frame. This is the 1 hour. We're going to look on the 1 hour. Let's take off this SAR because I don't have that on the screen unless I'm actually in a trade. And let's just look. You can even turn the sessions off and just find major order blocks, support and demand zones, whatever you want to call them. Look at where the price was just suddenly shifted in the market. Where was it just changed direction? We see here this is called a bullish order block when it just changes direction and just has this giant upside. Vice versa down here, you have this bearish order block. So now we can understand that price is going to possibly either interact up here, and when it does, we can possibly tell it will reject because it hasn't tested it again, or down here. We actually see that happen today, but we'll get into that later. And we can see now we build a context around why price is going to do or why it's doing what it's doing. And you'll see in this actual trading setup that I did this morning on this live stream. And if you want to watch me trade live, it's every Monday, 9:15 a.m. Eastern Standard Time. So now, once we build our order blocks, and I don't like to draw a ton of order blocks, just that's recent to price action. These two are very recent to price action, so that's what we're going to be looking at, okay? So now I like to trade on the 5 minutes. So now we're on the 5-minute chart. So now that we have the context of why price is doing what it's doing, let's turn sessions back on. Here are the rules of this strategy, because I want to make sure that is very emphasized. You need to make sure you know where context is at price. So once you have this set up, you can see that this literally respected here when we were in this trade. But again, I'll get over that. It's just really cool to see that price really does respect order blocks. That's why you need to understand those and don't ever blindly trade off indicators. So the first thing we're going to do is let's just remove all these lines. All these lines are support and resistance areas. They're key levels of where price moved in the market. So before market open, so you want to come to your computer if you're trading right before market open. Let's say 5-10 minutes before market open. You're going to find all that. You're going to find the context on the higher time frames. You're going to go down here lower time frame. You're going to find that recent high and that recent low. Okay, most of the time the high or low will be made in the London session, but sometimes like this morning, it'll make a newer high right in pre-market before the market opens. That's totally fine. Whatever that recent high and low is, that's what we're looking for. Okay, so that's rule number one, is we want to find those lows and highs so that way we can then do breakout trading from that. And then the second step is now we're going to make sure that our McGinley and our whole moving average is in the direction of where we're looking at going. So in this case, when this trade broke out at market open, right, this was a very weak break, and you can see here that the average, the whole moving average and the McGinley was kind of just trading sideways, right? Like this would be I would consider this a pretty risky trade. It was just moving really sideways, so there wasn't any clear direction in the trend. Now, I think, just full disclosure, I think I took this in that morning live stream and I got stopped out very quickly. But you know, you can't win them all. But this is a great indication that I probably shouldn't have taken this trade. This is just me looking back. But it's moving sideways. There's no clear direction. Obviously, when you have this, right, when the McGinley and the whole moving average are both aiming down and the price closes really strongly below these lines, you can start to see the trend shift. It was in this consolidating area, then it was on this high uptrend, and now it's shifting down because it's closing really strongly below these lines. That's what we're looking at here. So we're not going to be taking this trade. So rule number 2, after using the London high, London low, or the previous high and low, wherever that is, we're looking at clean breaks above or below the McGinley and the whole moving average in whatever direction we're going. And what's amazing about this strategy is you can catch breakouts before they happen. So again, a beautiful example was this morning's stream is this right here. This broke off and closed very strongly below the McGinley and the whole moving average. We have the trend starting to go down. So you see the whole moving average was aiming down. The McGinley was starting to aim down. So that's telling me that there is some bearish momentum coming in here. It's wanting to go down. And so I took a short roughly around this candle here when the candle opened. I mean, it was just very, very, a lot of momentum. So I just quickly got into a short at the end of that candle close when I got confirmation. Now here's where it gets really cool. So we don't blindly trade off just that indicator, right? I need to have the support and resistance. I need to know where price is. I need to know where price is most likely going to go. So I was confident taking this short, not only because it took and closed really strongly below these lines, but also it was heading for this support area here and this major order block here. So if you were watching my stream and you've seen, The next thing that I was looking at was I was wanting to see how price reacted off this support. If price just crashed on through, I knew that statistically most of the time it's going to probably hit this bullish order block. That's just how price action normally works. Now, obviously, we're not right all the time. Sometimes this could go crazy and do something else weird, but it worked. This is how most of the time US 30, NASDAQ, a lot of these assets usually trade. Now, you can do this with Ethereum and other assets, but I'm just sticking to US 30 because that's how I trade. And you can see perfectly this worked. And I caught, I think it was right around 150 some pips. Like I got out like right around here, and then it bounced off this major order block, boom, went in the other direction. Now, let's take a look at just one more example. So you've seen the short example here, just really quick. Overview again, we created our high, we created our low. We either want a break below the low or the high and then get into a long or a short, or if there is a clear break below the whole moving average and the McGinley, that is also valid as long as the trend is there, as long as they're going in the direction of the trend that we're possibly going into. So another great example was a trade I took here on Wednesday. So if we look here again, we mark our, so here's where market opens right here, 9:30, boom, right there. So this is what we've seen, right? So right before market opened, it formed a new high. So that's where our high would be. We would do our low right there. And then it started crashing back down. And we've seen here that price was inside both the whole moving average and the McGinley. This is ranging. We don't like to take these trades because it's inside of this range. So as you see, it closed below here. Okay, so full disclosure, I got stopped out right here. Now, this is why I have these templates, and this is why it's okay taking losses. You always see traders when they make these types of videos, oh no, it's a 100% win rate, 90%. This is a really good strategy, but it's not going to have a 100% win rate, not even probably a 95, 90% win rate. But it's not about the win rate, it's about the profit factor. For every $1 you lose, how many dollars can you gain? And in this scenario, it is amazing that you can take 2 to 3 to 4 losing trades, and it only takes that one nice breakout to make back all of those losses plus a ton of profit. So in this scenario, I got stopped out here, but as soon as it closed, now here's another cool thing. While I did have my stop loss set to 50, when it closed bullish above both of these lines, I would have gotten out. I did get out like right around here. So I didn't actually lose all 50 of those pips, but let's just say for full transparency, it did. Let's say I did lose all 50 pips in that trade right there. Now all we're looking at is either a break above, because now the trend turned bullish. We're looking at a break above that recent high, or we're looking at a break above, right above these lines. And exactly what happened is right here. We've seen a nice break right there. So again, I have my template setting here at 125 pips for a profit, 50 pips for a stop loss, and it just smashed right through. And then this is where you can use your SAR, your little tool here, to trail your stop loss, because when these breakouts happen, they freaking happen, okay? Like they freaking go crazy. So instead of just taking this 125, which you never want to be too greedy, like in that scenario that I showed you, this short that we took, I had 150 pips. I was fine taking that. But even in these scenarios where price is just super on the rise, what I'd like to do is, let's imagine this white line being my stop loss. So I stopped here, and every single time one of these yellow dots formed, I would go into my prop firm and I would change that stop loss accordingly to where these yellow dots are. And you can use this, look at this, to keep trailing it up until it hits. So roughly right around, now I think I took profit, again, full transparency, around here. When price started coming back down and it was like testing this area, I took profit here. I was happy with 190 pips. Okay, I was totally happy with that. But you could have used this yellow dot, trailed it all the way to right here where price crossed. And again, hindsight's 2020. You don't know what's about to happen, but I'm looking back and you can see how amazing these yellow dots are, this parabolic SAR, to trail your stop loss. And right there, you could have let that yellow dot be your trail stop loss. 242 pips, beautiful trade. And this is what the premise of breakout trading is all about, getting that one solid winner, and then you're done for the day, right? And that's the last point I want to get at with this strategy is, once you get one of these winners, do not give it back to the market, okay? Like if you take this win, go home, you're done, go touch grass, get off the charts, you're done for the day. You lost 50 pips here, won 242. I think you're fine for trading for the rest of the day. And you can, add this to your chart, click this replay button and backtest and practice it yourself. You can literally go all day long finding these setups, right? Again, here's where market opens right here at 9:30. Boom, so this red line here, let's draw our lows. Our low is there, our high is there. All we're looking at is either a break below here for a short or a break above here for a high, or a break below the Hull and the McGinley. We see a nice break right here with this red arrow. Again, we're not blindly trading off the red arrow. We're seeing a break below the red arrow. We wouldn't have taken this green long here because look how weak this is. You see that, for one, it technically didn't really close. It closed like right on that line, so this would be a false entry anyways if you were just blindly trading off these arrows. But you see how the trend is still down? You see how the whole moving average is going down, the McGinley is going down. Like, both of these are going down. The trend is down. You would be trading against the trend if you were to take a long here. That's why you never want to blindly trade off of an indicator. So right here, this was our solid confirmation. That's the last thing we need after finding the context of this price action. And then you would just, boom, take a short. I have my 5-minute breakout settings saved. And then this smash profit right there. And this is just a rinse and repeat strategy. Again, you can use these yellow dots like I do sometimes to trail my stop loss. If you were to use these yellow dots right here is where you would have got out. And this is like a give or take. Sometimes these yellow dots can squeeze out a little more profit. Sometimes they can give you indications of maybe when to put your stop loss into break even. You can tailor this strategy to literally however you want to trade. So if you were to literally just use the yellow dots, you still would have got 73 freaking pips, a 1.46 risk-reward ratio. Or if you were like, okay, well, I want to use these yellow dots as my indication to put my stop loss into freaking break even or something. I don't know. And then you could have trailed this all the way down. Or you could just use the McGinley as your indicator to trail your stop loss. And then, if that's the case, you could have just waited until price crossed, which would be around there. You can literally tailor this to however you want to trade. This is not the way of trading. This is a way of trading that has been successful for me, and I wanted to just really share this with you all. So I really hope you found value in this video. If you have any additional questions, please feel free to drop them in the comments below. I do have a private Discord called Sleep Money Club where me and a ton of other people talk about options. I post my scalping alerts. I do private live streams over there. Other people drop their options plays, passive income plays. It's an amazing community, and you get a 3-day free pass if you just want to try it out and give a little trial there. So I hope you found this video helpful, and I really am excited to drop all of my other strategies I personally use on my funded account. So next time, I love you guys. Thank you so much for watching, and always remember, never let anybody tell you that you can't do something they have never done themselves. And I will see you later.